This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news today about silver. I mean, unless you've been living under a rock, everybody's heard about a little stock called GameStop. And then there's Reddit, and there's Robinhood, and there's these millions of little investors kicking the hedge funds' asses. This is a wonderful time. But we have something even more important today, something much more valuable than GameStop. It's something with real value. It's called silver. And so you can tell I just rushed from the gym because of an opportunity to interview my friend Peter Schiff. And he's everywhere. I see him everywhere because he is the expert on gold and silver and that whole industry. And for full disclosure, I am an investor with Peter Schiff. So take that for what it's worth. But anyway, I'm very excited about talking to Peter because I've been in silver since 1964. The first time I looked at a quarter and a dime, it had copper around it. And I knew I was being screwed. So ever since then, I've been saving gold, silver, and all this stuff. And I'm very happy what's happening with silver today. So with that, Peter Schiff is the expert on gold and silver, plus the mining shares and all this. So Peter, welcome to the program.
Well, thanks for having me on. And yeah, this is really quite a day in the metals market, quite a weekend, really, with a lot of people buying physical gold and silver. I think Schiff Gold, we probably had our busiest day in silver ever. So people who are buying are going to have to wait a little longer than normal to get delivery because of the backlog. But the price gets locked in, although the premiums are a little bit higher now than they typically are, thanks to the elevated demand. But, there's a big difference between the little guys who are buying silver and the little guys who are still buying GameStop or who still own GameStop. GameStop is going to crash. It's only a question of when. I mean, GameStop was overvalued, when it was $10, $20 a share, and the shorts were jumping all over it. So now when you're talking about hundreds of dollars a share, it got as high as over $500 a share. This is not just the shorts covering. There are a lot of little investors who paid $300, $400 a share for GameStop. That stock could go to zero, or close to it. So a lot of people are going to get hurt.
Yeah, Peter, can you explain for those who do not know, what about shorting GameStop? Can you explain the mechanisms in there?
Well, sure. Most people look at stocks and they think a stock is a good deal, and so they want to buy it, right? You think it's undervalued. You think the price is going to go up. Well, if you think a stock is expensive, if you think it's overvalued, well, obviously you don't want to buy it. But if you short it, meaning you sell it, you can profit from the stock's decline. Yeah, now, the way you do that...
Peter, hang on. This is the part that drives people nuts about shorting. You sell a stock you don't own.
Right. But in order to do it, you borrow the shares from somebody who does own it.
Right.
So I go and I borrow somebody's stock, and then I take that stock and I sell it to somebody else who wants to buy it. Now, when the price drops, I can go into the market, buy it at that lower price, and then take the shares I borrowed and repay them. And the owner, is no worse for wear. He gets his stock back. Of course, the stock has gone down, so he's losing, but he has the same shares. And so, the only thing the borrower really has to do is pay the dividend. But if you short a stock that's not paying a dividend, well, then you don't have to pay that. And so you can profit. But the risk is that if the stock price starts to go up, your broker is going to mark you to the market, meaning that as the price of the stock's going up, on paper, you're losing money. And if the losses get to be high enough, the broker gives you a margin call. And hey, you got to deposit more money. Well, what if you don't want to deposit more money?
So Peter,
then you got to buy the stock.
Peter, you got to keep the math simple for me. So I go into some broker, I borrow, let's say, GameStop at $10. I borrow it. So that means I have to pay it back at $10. And I'm counting on the stock GameStop to go to $5. But if the GameStop goes up, let's say from $10 to $100, that means I have to buy GameStop at $100 a share, and I just got wiped out. Is that correct?
Yeah, you've got to go into the market and pay 100 for something that you sold for 10. So you're losing 10 times what you got. But the problem is, if you don't have a big enough bankroll, depending on how heavily you shorted it, you may not have enough money, because as the stock is going up, you're having to market to the market. And now your losses, right? Just like when you buy a stock and it's going up, those are your gains on when you're short, that's a loss. You're seeing that loss in your account. And at some point, the losses the shorts can't take it anymore. And they're forced to buy the stock just to get rid of the losses, even though they know it's overpriced and they're confident that it's going to crash. They just can't take it anymore. And that's why it's a squeeze, right? You're squeezing these guys out of their shorts, and you're forcing them to buy the stock at a much higher price than what they sold it for.
And so some of the Darth Vaders or the dark side with the hedge funds who are shorted, they've always just shorted stocks. They've made fortunes because nobody challenged them. And then comes along Reddit and Robinhood. And
that's not true, because short squeezes have been going on since the beginning.
Peter, I understand.
Yeah.
But never has such a mass come at them.
Yeah, this. Been
around 1400 with Napoleon, so it's been around for a while. But the thing is, I just want people to understand what we're talking about here. So the thing about buying, let's say GameStop at $10, the possibility is it could go up forever. Not possibly, but that's what they're afraid of. It keeps going up, and these Reddit and Robinhood and all these retail traders keep pounding on them. The hedge fund guys, their losses are approaching infinite. They have to pay money.
Well, in theory, you could say it can go up forever if nobody sells, but eventually GameStop is going to sell, right? The company is going to create new shares and sell them into the market and take the cash. So there is going to be a seller, even if all the Reddit raiders hold tight and they say, we're never going to sell. GameStop is going to sell. Right. And there has to be a buyer or the price is going to crash. My point is, we've been having short squeezes as long as we've had shorts. But yes, this is a very unique type of short squeeze. Nobody thought this was going to happen. Like Custer, didn't expect all those Indians, that little bighorn. But you know what? It's a risk. These are big boys. They have a lot of money. Murphy has a law, right? Anything that can go wrong will go wrong.
Peter, so did somebody step in to protect the hedge funds? Is that what happened?
Well, maybe. We don't know, right? But what happened was Robinhood, which is where a lot of these buys were being executed, right? A lot of these small investors on Reddit have these Robinhood accounts because they have no minimums. You can buy a fraction of a share, and it's zero commission. You're trading for free. So they have this big platform of do-it-yourselfers who got in on it. Now, what people don't realize is there's no free lunch, right? So you open up this Robinhood account, and they're not charging you anything to trade. So then you have to ask yourself, okay, these guys are not just, charitable organization. How do they make their money, right? Who's paying the bills so that I can trade for free? Well, the people who are paying the bills are some of these hedge funds that were short these stocks. So you got to think, all right, maybe the hedge funds are like, hey, we're your actual customers here. You're screwing us over. You better stop this buying. Or maybe they told Robinhood, we don't want to buy those orders anymore. If you keep giving us orders to buy these stocks, we don't want them. And now, in order for Robinhood to execute them, they had to pay somebody to execute the trades. But they're not charging the customers anything. So they're losing money every time they trade. So they probably had to halt the trading to stop the bleeding because they would have run out of money.
Right. So, I was laughing my butt off because GameStop, in my opinion, is worthless. It's a retailer that's out of business. His business model is finished. GameStop as a brand is probably valuable, but not as the existing business.
Yeah, I mean, they have to turn it over to, it has to go from a brick and mortar, store in a mall, to something online, although how do you compete with Amazon? How do you compete with, these big behemoths?
Yeah.
But yeah, I mean, there's probably some way to restructure it in a much smaller way, but I'm sure all the equity holders would get wiped out in that restructuring. The bond holders will end up owning the company. I don't really know how much debt the company has because I had no position in GameStop. But to me, it's just a future blockbuster, right? I mean, the video stores that we grew up with, or we didn't even grow up with them. They started in the 80s, but you went and rented a video. But obviously, they got put out of business, and people are not going to the mall and buying a physical game. They're just downloading stuff online, or they're signing up for these services where you have unlimited gaming, like a Netflix of games. And these are dinosaurs, and the shorts knew it. That's why there's so many shorts in these stocks, because they could see that the companies are in trouble.
Yeah. So to me, I was laughing my butt off because GameStop sold these games to these kids who understand games better than you and I ever will. And then they turned against GameStop, or they turned against Wall Street. And it's a classic case of David kicking Goliath. But so the hedge funds who have billions, and the worst thing about it is this, the hedge funds are in pension funds. And I think there's going to be the ripple effect from this is going to be massive. But let's get to a subject you and I are near and dear of. And let me say again, I do invest with Peter Schiff. What is happening with silver? What is Reddit and Robinhood going after silver for?
Well, here's the thing. The one thing that silver has in common with GameStop is a short interest. There are big banks like JP Morgan, right? They're the boogeyman, right? Shorting silver, right? They have short positions.
Well, 1 second.
But
they screw guys like you and me because we're counting for the price to go up and they're keeping the price down, the little bastard.
Well, but as far as I'm concerned, since I want to get more people to buy silver, they're doing us all a favor. They're letting us buy more silver cheap by selling it. But here's the thing that they focused on. And in fact, as soon as this GameStop thing exploded, on Wednesday last week, the title of my podcast on the Peter Schiff Show was "The Mother of All Short Squeezes Is Yet to Come." And what I was referring to was the short squeeze in silver and in gold. And then, the next day, that's what they're doing. Now, I don't know that they got it from me. Maybe they just saw the similarities on their own, or somebody did. But here's the big thing. Most of the silver that's traded is traded on futures exchanges. People aren't calling up Schiff Gold and buying their silver and we're mailing it out to them. They're just buying a contract on the COMEX. And a silver contract is 5,000 ounces of silver. That's a lot of silver, but you don't have to pay for all of it. The margin requirement, maybe you just put down 3% or 5%, whatever it is, and now you have a contract that entitles you to 5,000 ounces of silver. Now, somebody else sells that contract to you. So you have the right to buy 5,000 ounces of silver. Somebody else has the obligation to deliver you 5,000 ounces of silver, except the person who is entering that short and has the obligation to deliver, they don't have the silver. They don't own any silver, and they're confident that they're never going to actually have to deliver it because the person who bought it doesn't want the silver either. He's just betting that the price goes up. Right. So this is the key. What happens if all these people who are buying silver futures contracts decide, or a big number of them decide, I actually want my silver, and they pay their full amount, right? They don't just pay the margin, they pay the balance that they owe. And now the guy that's short gets sent a letter from the COMEX, you owe us 5,000 ounces of silver, or maybe 50,000 ounces, or 500,000, depending on how many contracts are short. And then the guy's like, but I don't have any silver. Okay, well, go buy some. Now you have to go into the actual market. You got to call up Schiff Gold. Hey, you guys got any silver? Sorry, we're out of silver. That's like, well, now you go, well, we'll pay any price. Now we have to start calling our clients. You remember that silver we sold you at $30? I got a guy willing to pay $200. Will you sell him some? Because they have to find it. They have to deliver on the contract. So that ultimately, that's what could happen to silver, and it will happen. So it's inevitable, right? Just Murphy's Law. It's going to happen.
It's happening. Oh, and FYI, as I also do speak for Lear Capital, and they're Peter's competitor, and I buy silver and gold from Lear. And I buy silver and gold from anybody I can get a bargain in. And, because I've been doing this since I was a kid. I love
Yeah,
gold.
you just got to make sure when people are buying silver now, don't buy any rare coins, collectible coins. You don't want to be a coin collector. You want to be a bullion investor.
I never have. I like buying money. Like Scrooge McDuck, he was sat on a pile of gold and silver.
Yeah.
Cartoon hero. Some guys watch Elmer Fudd. I watch Scrooge McDuck. So you and I.
Yeah, he was the smartest one of the bunch.
Yeah. So,
he had some good lessons to teach his little nephews.
On Lear Capital saying, I love silver. And all my friends going, you're an idiot. I said, no, I love silver. Why don't you buy Amazon? I said, no, I'd rather have silver. And so this morning, a couple of those doubters called me this morning and says, you're right. You're right. I said, it's nice to be right. But anyway, what we're getting to next when we come back is there's a difference between GameStop and silver. There really is a global shortage of silver. But not only that is the value, the intrinsic value, the real value of silver is about to go up with the Green New Deal, with electric cars, with medicines and all this. And there is this major silver short. And the people that ultimately want the silver never disclose that they want it. So we still don't know who's squirming out there because there's companies like Toshiba, Sony, Apple, and Tesla. They all need silver, but nobody's saying how much they need. So we don't know how bad the shortage is. When we come back with more with Peter Schiff, and we're going why this is the most exciting time for Peter and I. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. Good news and bad news about money. And today we're talking about Reddit, Robinhood, and silver versus GameStop. And I have a longtime friend of mine, Peter Schiff. I've been to his house in Puerto Rico, where he is now. And Peter's one of the smartest guys I know when it comes to gold and silver. And for full disclosure, I buy from him. I buy from Lear Capital. I buy from my friend Dana Samuels in Austin, Texas. And I have a Biden moment, but my friend Jerry Williams here in Phoenix, I buy as much as I can get my hands on. When people say, what's the price? I said, I don't care about the price. I said, how many ounces do you have? And I do not buy collectibles or numismatic. So with that, Peter, what is the real value of silver in industry?
Well, I mean, silver has tremendous value in industry. That's why it's money. People forget with all the hysteria about Bitcoin that money has to have intrinsic value. Money has to be a commodity. That's what money is. It's the most marketable, most liquid commodity. That's why it's a store of value. The reason that silver is a store of value is because you're storing all of the things that you can do with the silver after you melt it down, right? That's what you're storing. And so silver is very valuable metal. I mean, at one point, they used a lot of it in photography, and people were saying, oh, well, now there's no more film, so who's going to need silver? But meanwhile, there's plenty of other uses for silver out there as a conductor of electricity. It's used in the automotive industry, along with a lot of, copper and nickel are also in demand for electric vehicles, for the batteries that operate them. But there are all sorts of applications for silver. There's even more for gold. The problem is gold is so expensive that in many cases, they substitute silver for gold or copper for gold because they can't afford the gold. I mean, if they could, they would use gold, but it's too expensive. But in certain areas where you absolutely need the best, they buy gold. I mean, gold is used in chips and all sorts of things.
Just one more thing is gold does not disappear. Silver is used up. And I mean, it's a certain percentage that goes short every year. And I'm not sure on the numbers, but I was listening, I think Keith Neumeyer of First Majestic, he was saying that there's only 80% of the silver required that's available. They're what, that 20% short every year now, because markets getting tougher and tougher and tougher. Electronic vehicles, solar panels, medicine. You know, it just keeps increasing in value because it's an industrial metal, as well as a precious metal, as well as a commodity.
And that's why it doesn't make sense that it really is so cheap in relation to gold. Because, you know, you can buy a lot of silver for an ounce of gold, which is why we've been encouraging people, even at Schiff Gold, to use some of their gold to buy silver. Like, hey, you don't have any silver, take some of your gold and buy some silver with it.
Right.
Because you're going to end up with a lot of extra ounces. And eventually you might be able to sell the silver and buy your gold back and get a lot more gold than you started with, because the price of silver has gone way up. But while I'm mentioning a thing like Bitcoin, I mean, Bitcoin has a lot more in common with GameStop than it does with gold or silver, right? Because it's the same concept: pump and dump, greater fool theory. You're buying something that has no value, but just because it's gone up, everybody thinks that they've, rediscovered, the wheel or something. Like, oh my God, you see, it works because the price went up. Look, because the price of GameStop went from $10 to $500, that doesn't change the nature of that business. They're not making any more money in their malls than they were before. It's the same failed business. And Bitcoin at 30,000 is the same Bitcoin at $3. There's no fundamental difference other than the fact that more people own it and they've been willing to buy it. But why are people buying GameStop? Because they think somebody else will pay them more.
Right.
Why are people buying Bitcoin? Because they think somebody else will pay them more. Why am I buying silver? Because I know somebody's going to need it.
Right.
Because it's used in industry.
Right.
And I'm going to store the silver because the people who need the silver are going to pay a lot of money to get mine.
Right.
But nobody needs Bitcoin. It's only because you want to speculate in it.
Peter, for full disclosure, I own a lot of Bitcoin too. I'm not.
Yeah, well, nobody's perfect. But you know what? If you sell them now, you could laugh all the way to the bank, right? Because anybody who bought Bitcoin, who sells their Bitcoin, can make fun of me for not buying it. But if you bought your Bitcoin and you don't sell, I'm going to be the one making fun of you for not selling, because then you're going to end up as a bag holder.
Well, Peter, you know what's the most entertaining about you is when you get into these arguments with guys like Max Kaiser and all this stuff. To me, it's just entertainment.
Well, I don't even argue with Max anymore. He just calls me names all the time. He's just really taken the low road. So I just avoid him.
That's what's funny to me. I don't really get into the food fight. It's just not. But it's good entertainment, Peter. You're a very entertaining person. So, but I do buy it. And as Yogi Berra once said, when you come to a fork in the road, take it. So I have gold, silver, and Bitcoin. And do I know anything? No, but that's why I buy from you, and that's why I buy Bitcoin. I'm really kind of a dummy, but I do know that the dollar.
Yeah,
I wait.
There's an argument for that. I just think I'm smart enough not to buy it.
Right,
but,
I understand. And you are very smart.
I've outsmarted myself out of a lot of paper profits.
There's no doubt.
But you know what? My silver stocks are doing a lot better than Bitcoin today.
Okay, good. I own silver stock too. I don't know what I'm getting at here, but anyway. I just think it's entertaining, because it doesn't make any difference right now because the real problem is the dollar.
I agree. But the dollar is a problem because it has no fundamental value.
Right.
It's only backed by faith.
Right.
And that's the same thing. That's the same problem Bitcoin has.
Right.
That's why I want something real. I want real money, right? You call it God's money, but that's what I want. I want the real deal. I don't want some new iteration of fool's gold.
Right. And also, Peter, I've built a gold mine in China, which I'll never do again because they took it. And
they took it because it was valuable.
Yeah. Well, and then I also built a silver mine in Argentina. And unfortunately, my stockbroker said to sell it. So I sold it. And I'll never listen to those guys again. You know what I mean? I know what I love. Gold and silver are God's money. And I call Bitcoin people's money, is decentralized finance. Other than that, that's all I know. So I turn to guys like you and Rickards and all those guys. I listen to them. I listen to Max Kaiser. He's entertaining too. But this is the most exciting time.
Well, listen to him for entertainment. Don't take any investment advice from him. He was a stand-up comedian, I think, at one time. So.
Well, so are you, Peter.
Well, I was an amateur. I think he was a pro.
So can we talk about how GameStop is going to affect pensions? Because this is a book I wrote with my friend Ted Siddell, is Who Stole My Pension?
Yeah.
And this came out in January of 2020, so a year now.
Well.
And my concern is they're going to have to print more fake dollars simply because the pensions are bust, and their pensions are stuffed with stuff like GameStop.
Well, to the extent that any pensions own GameStop, they just got lucky. They won the lottery. Because I'm sure if you're a pension manager and you made the mistake of buying GameStop, and now you get a get out of jail free card, it's like you won the. So they're selling. So there's probably more pensions that are going to benefit from GameStop because now they're going to get out. You know, it's these little investors, not the pensions, that are buying. The pensions are run by more sophisticated guys who are fiduciaries. They're not buying, they're selling. Yeah. But the pensions in general are woefully underfunded. They're investing in the equivalent of GameStop. Just, you know, GameStop is like, you know, the extreme example. But the whole market is overpriced. You have all sorts of companies that have crazy pie in the sky multiples that have no earnings, that are overvalued just like GameStop. And people are paying ridiculous prices for them. Like everybody talks about Tesla. I mean, Tesla, yeah, I mean, you know, they make some nice cars. But I mean, the stock price, it has no bearing on any potential value of that business.
Right.
But nobody cares because people keep buying the stock. And there's all sorts of Teslas out there. They're not as big and extreme, and they're not as an extreme as GameStop. But all the pensions are loaded up with overpriced stocks. The reason was because the Fed forced interest rates down so low that the pension funds could not get a return on bond portfolios, which is what they should have. So they had to go really out on the risk curve. They had to basically take it all to the casino and roll the dice and hope for the best, because there was no way to deliver the returns that they were promising with 0% interest rates. So now they're all in overpriced stocks. They're going to crash. The pensions are broke. And you know what? The government supposedly guarantees all this pensions. Well, the government is broke too. So all the money is going to be printed, which means none of it is going to have any value, which is why we buy gold and silver now.
So one of the, you know, Peter and I hang out on the Real Estate Guys cruise when they had a cruise before COVID. And Peter is the most, I mean, you're one of the smartest guys I know, Peter, when it comes to this world here.
Thank you. But, you know, you're not exactly a dummy either. You know,
I hang out with smart guys. I just listen. But this is my question. You know, guys like Harry Dent are saying a stock market crash is coming. So would you explain to everybody what you see, not only in stocks, you know, the basic stock market that pensions are in, 401ks, but also bond markets? I've never understood bonds. What's going on with, because there's no yield. So what's happened with the bond market?
Yeah, now. Well, you know, Harry and Harry, by the way, lives in Puerto Rico, and our wives have actually become pretty good friends. In fact, they just went out to lunch the other day in San Juan. So, but you know, Harry and I, you know, we agree on a lot of things, including that the stock market is overvalued. It's just that he expects the stock market to crash in dollar terms, and I only expect it to crash in gold terms. I think they'll print enough money so that the dollar crashes more than stocks. So you got to own real money.
That's why.
But, you know, the bond market is so corrupted by government. All a bond is a formal promissory note. It's like, I go, Robert, you know, can you loan me $1,000? I'll pay you back in a year. And then, okay, and you write up an IOU. I owe Robert $1,000. That's a bond, right? That's really what it is. That's a formal IOU. But who's dumb enough to loan somebody money and not get interest? Because what if I don't get paid back? What if there's inflation?
But what I'm saying, Peter, is you're gonna loan them money. They're not paying you any interest on it, and they're printing more money.
Yes.
My whole case, because like I said, I never understood bonds because I never had any money to put in a bond in the first place. And the thing I never said is that's who I'm betting against. I'm buying gold, silver, and Bitcoin because I don't trust that other market. That's pure and
Well,
solid.
the big buyer of bonds now are the central banks.
Right.
Because they can just print money to buy it. Because nobody who's actually thinking is going to loan the U.S. government money for 10 years or 30 years for 1% interest, 2% interest. I mean, obviously, the rate of inflation is higher than that. And you're paying taxes on the interest, which doesn't even cover the inflation rate.
But,
So,
Peter, but Peter, let me ask this question. How much money are they going to print in 2021?
well, look, they're printing more money than they're collecting in taxes. I mean, they're printing trillions. I don't know, $4 trillion a year. They're doing $5 trillion, $6 trillion. I mean, I was looking at these charts the other day. Something like 40% of all the dollars that exist in circulation were created since COVID. I mean, going back from the beginning. And the problem is, it's going to get worse because fewer and fewer people are working and paying taxes, and more people are just expecting a government check.
Right.
And where's the government getting the money if it's not getting it from the taxpayer?
So
and it's not borrowing it because nobody is dumb enough to lend. So it's all from the Fed. They're just printing the money.
So if Reddit and Robinhood and all these retail buyers, blow the guys like JP Morgan all the water, and the useful value of silver actually comes to light, everybody should own gold and silver anyway, regardless of the short positions.
Yes, I don't think the Reddit guys have the firepower to do this on their own. But what might happen is some of the bigger players around the world may wake up and see this as a catalyst to move into silver. Yeah. And that could do it. But it was going to happen inevitably.
Yes.
Whether the Reddit guys accelerated the process or not, we don't know.
Yes. That's why you and I have been kind of the Lone Ranger all these years talking about gold and silver and all this. And my friends, and then I'm on Lair Capital and Fox going, buy silver. And going, what are you talking about? Because they're all in Amazon or Apple.
Yeah, but the good thing is if what's happening on Reddit causes some little people, some average Americans who didn't own any silver to now buy some,
yes,
as long as they don't sell it, if it drops a little bit, because obviously when everybody rushes in, the price could push up, we might have a pullback. As long as they don't get discouraged and sell for a loss, this is going to be very important because people are going to need that silver. When you start to see runaway inflation or hyperinflation, having that real money, having silver, could be the difference between poverty and being okay.
Well, let me ask this question: how is silver going to affect the price of gold?
Well, the metals are going to generally be positively correlated. So if silver's going up, I mean, gold's going to go up too. They generally move in the same direction. But what I think is happening right now is there are people that are spreading metals where, let's say, they're short silver and they're long gold. And now there's a big move up in silver. So in the short run, you might have some people that have to close those trades, in which case they have to sell their gold and buy silver. And so that could be keeping a little bit of a lid on gold. But once those trades are unwound, that would take the selling pressure off of gold. And I think gold could move. So right now, I mean, people really, they're all looking at silver, but we could get a nice pop in gold.
And then silver is about $30 an ounce right now. And I don't know if you do this, but do you ever, your buddy, Max Kaiser, he says Bitcoin is going to $220,000 in 2021. Do you have any forecast for gold and silver per ounce?
Well, unlike Bitcoin, right? There's real demand for gold and silver, right? The only demand for Bitcoin comes from speculators. Right. So everybody like Max Kaiser who owns it, they have to constantly pump the hell out of it with pie in the sky forecasts to try to con people into buying it. So what do you expect him to say, right? The crypto guys, they're like the financial Hare Krishners. They're constantly trying to convert other people into their cult, right? So I know that there's real demand for gold and silver. Gold and silver is real money. Eventually, the price is going to go ballistic because it's not really how high the price of gold and silver go, but how low the value of the dollar goes.
Yes.
Because it's all a measure of how many dollars you're going to need to buy gold and silver.
Yes.
And since there's no floor to the dollar, there's no ceiling to the price of gold.
Okay.
So I think it's going a lot higher. How high, I don't know in this year. But I know that if you don't buy it, you'll regret it one day.
Right. I mean, I love, silver to me is high at $30. I'm still a buyer.
Yeah, well, ultimately, look, it's got a nice double top around 50 because it got to 50 when the Hunt brothers tried to corner the market in 1980, and then it got to 50 again in 2011. I think once we get through 50, 50 is going to be the new floor, and we're headed a lot higher.
I agree.
But there's resistance at about the $30 level where we are now. There's been some resistance here,
and
so it could pull back.
Guys like J.P. Morgan want to keep the price low, and the end user like Sony and Toshiba and all those guys and Tesla, they want to keep the price of silver low. That's why nobody knows how big is the demand for silver. That's the wild card. Hey, anyway, Peter, before we end, can you give us a complete plug on how people can do business with Peter Schiff?
I'm happy to give the complete Peter Schiff plug. So first of all, for physical gold and silver, Schiff Gold, I mean, we've got great prices, shop around, but we have personalized service. It's not online, and so we'll make sure you get the right metal at the right price, and make sure not to push you into rare coins, collectibles, numismatics, something like that.
Right.
But if you have a larger amount of money and you want to build a diversified portfolio that is not in the US dollar, if you want to avoid the inflation tax, which is what inflation is, as I said, it's a tax. You want to avoid that tax, you have to get out of what's being taxed, which is the US dollar. And we're building portfolios of foreign stocks, good dividend-paying stocks all around the world in countries that are actually going to benefit from the dollar's demise, where the people are going to see their standard of living increase rather than go down the drain. So there's a lot of ways to profit from this realignment of the global pecking order as the dollar loses its reserve currency status. So you can call up my broker-dealer at Euro Pacific Capital, europac.com, or europacificfunds.com, epacfunds.com, to learn about our strategies. I have 5 mutual funds, which you can buy anywhere, any of the big discounters. They don't have mutual funds on Robinhood, but at Schwab, E-Trade, Fidelity, all these, you get my gold fund, my emerging market fund, my value fund, dividend payers fund, foreign bond fund. Just get out of the dollar and do all that. And then just to follow me, just to, get my take on what's happening in the news, the financial markets, and politics, in the economy. Schiff Radio is my podcast, or the Peter Schiff Show is the podcast. You can listen on schiffradio.com. You can go to my YouTube channel, getting more and more subscribers every day. I'm neck and neck with you, Robert. I just noticed this week, I think I just moved above you by 1 notch in the ratings for the podcast. I got up to number 9. I think you were number 10 for the investment podcast. You're normally ahead of me, but I think all this silver stuff and Wall Street stuff, I kind of straight away.
That's why I say you've been busy. It's a good thing you and I have some good friends and there's mutual respect. But anyway, Peter, thank you very much, because I'm not kidding. Hanging out with Peter on the Real Estate Guys cruise is a sheer pleasure. I wish we had one.
Yeah, well, pleasure is mutual. You're one of the highlights of that cruise if they ever get them started again.
Yeah.
But
anyway, Peter, thank you very much, and thank you for your wealth of knowledge and your contribution of your experience to this world of insane money. Thank you, Peter.
Okay, my pleasure. Take care.
Thank you. And we come back with a final word for Rich Dad Radio. Thank you, Peter. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. I want to thanks to my good friend Peter Schiff for the comedy half hour. And he is entertaining, and Max Kaiser is entertaining. It's really interesting. But I learned the most because I listen to both sides, and that's intelligence. And you see both sides of the coin. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, and YouTube. And if you listen to this program again, just go to richdadradio.com. Listen to it again. You'll learn twice as much. But more importantly, if you have friends, family members, or business associates who want to know what's going on in the silver, gold, Bitcoin, and GameStop and Robinhood and Reddit market, this is a great, great fundamental program to listen to. You can understand the real problem is the U.S. dollar is in trouble. That's the real problem. So I don't get into this food fight or a cat fight about gold, silver, or Bitcoin. I like them all. But I think the thing that's interesting is what Peter said about him kicking our bus on YouTube. So I want to ask Sarah, who is our producer here.
Fake news.
Fake news. Fake news.
No, I was just trying to check podcast, rankings before we pulled, before we started, and I can't get to it fast enough. But I just want to clarify, he called us this morning to get on our show.
That's correct.
So what does that tell you? He wants to be on our show because we have a bigger audience.
But the thing I love about Sarah, you're now inspired, aren't you?
Oh, I mean, I love competition.
I know. And I think that's the attitude that people need to have. We have too much this victim mentality. Oh, you hurt my feelings. You said something. You did this. You know, you hurt my fans. I'm going, oh, give me a break.
No, and we love all of these guys. Peter Schiff,
George Gammon.
I
was at a party with him the other night. I was
mad
great.
I wasn't invited.
You were always invited.
I'm teasing. It sounds like it was a great party. But anyway, so competition, it's all in fun.
Yeah.
We're on his show, he's on our show, so it doesn't really matter. But it just drives me to push this out faster. Yeah.
And I want to plug, I do buy from Peter Schiff because I like his intel. I mean, his knowledge, his wisdom is deep. He follows his father's footsteps. But I also invest with Lear Capital and Dana Samuelson out of Austin and American Precious Metals with Jerry Williams. Because I go to those guys, Jerry Williams and Dana Samuelson and Lear Capital, because they're pros. They are in the business every single day.
Yeah. I
don't listen to somebody who's speculating on Reddit. I want to know what's really going on in the market. So I'll just end by saying this. I think, first of all, what are your final words on this subject?
I have, two things. One, with this GameStop issue, to me, I mean, it was all a game, right? Reddit was really just trying to stick it to these Wall Street guys. But I want to caution our listeners or, anybody else who's thinking about suddenly jumping in the market, right?
Don't do that.
You've got to learn the fundamentals. Yeah. Because if they would have done it the way maybe Andy Tanner teaches, they would have never bought GameStop because the fundamentals aren't there. The cash flow isn't there. You know what I mean?
There's no business there.
Right.
It's a defunct business model. It's like, what's that?
Blockbuster
versus Netflix.
Right.
That's what's happening.
Right. So I know there's a lot of hype and people are, let's,
get rich quick.
Yeah, because all these apps make it free to trade and easy to trade, but you're not learning anything by doing that, and you'll probably lose a lot of money doing that. So I just want to caution our listeners.
That's how people learn, I mean, you jump in and get hammered.
And then you learn not to do it ever again. The second thing is we talked a little bit about pensions, and so I want to quickly cover. So the reason why the hedge fund managers were pissed at the Reddit guys is because those hedge funds they're what stuffed pensions are stuffed with, right?
But the profits hedge funds lost come out of pensions too. Correct.
So even though people might think, oh, it's hedge funds versus Redditors, no, you're talking about millions of people that hold pensions that these hedge, so that's another thing, thing to research and look up too, because it's not just these one versus the other. It's affecting a lot of people.
Oh God, this is huge.
This game. So anyway, I think this time is a huge learning opportunity for so many people for so many things. So I just think it's a cool time to be
get
alive.
Smarter. Yeah. And if I like what you said, I would take a course from Andy Tanner so you understand the stock market. And if you want to understand real estate, there's Ken McElroy, because the real estate market is really about debt and tax. I don't pay taxes. I always give Peter grief because the only reason he pays taxes, the reason he's in Puerto Rico, is he's in paper assets or gold, where real estate guys don't pay taxes anyway. Mm-hmm. That's why Trump doesn't pay taxes. But that's education, Right. You don't get, I hate Trump, he makes a lot of money and pays no taxes. That's stupid. I want to find out how does he do it.
Yeah.
And, if Max Kaiser attacks gold and silver, I want to find out why he's attacking it. And then Peter attacks back at Max Kaiser. I find it entertaining education.
Yeah. Well,
and I think that's the most important thing, right?
Yeah, it makes it, when you get that banter, you're wondering, why does he think this way?
Yeah.
Why is Peter so against Bitcoin? And I can see his argument.
I do.
And I can see the argument against silver. So, but I think that just inspires people to learn. And I hope that that's what we're doing on this show.
Yeah. And I do love silver. Like I said, I started buying silver in 1964. I bought my first gold coin in 1972. when it was illegal for Americans to own gold, and now I got lots of it. And I finally shifted over to Bitcoin and Ethereum and all that stuff. You know why? Is because I got, gold and silver. You can't run with it, but you can run with Bitcoin.
Right.
And that's a big advantage to the whole thing. So everybody out there, as Yogi Berra said, when you come to the fork in the road, take it. Buy gold, silver, Bitcoin. Thank you for listening to the Rich Dad Radio Show.